All right, good morning, everyone. It is 11:29 in the morning of September the 20th, 2021. And today I get to do a negative $417 recap. I tried trading EDSA at the level that I had spoken about in the pre-market in the strategy session. And, well, it shook me off. So here is a chart, a 1 minute chart of EDSA. And so it opened up at, let's see, it opened at $9.43, spiked up to almost 10, and then started pulling back. And what had me choose this entry right here, let me put, so here's the Fibonacci. Now this is a Fibonacci that I had put in place. It's strange. Why are my Fibonacci levels off? Oh no, they're not off. Okay. Oh, I put the mark in the wrong spot. That's why. I don't know why I marked that right there. This is the entry. This is where I took my entry, right? Oops. See if I can keep my line straight. There we go. Right there is where I took the entry. Okay, so let me take this stuff off again so it's easier to see. So here's my entry, and then there's my exit. And unfortunately, I had another level that more accurately represented where support would come in. And it's really kind of strange. So the $7.60 level right here, when I was looking at it this morning, I was doing my pre-market strategy session. This $7.60 level was on, and it looks more like a pivot. Let me go to the 10-minute here. And you can see on the 10-minute, it looks more like a pivot back here where I traded it before. So here's this morning pivot, right, at $7.60. When I was doing the pre-market strategy session, though, I was kind of like, $7.60, this pivot from this day, nearly, 10 months ago. I was kind of like, who's paying attention to that, right? Well, so as it turns out, that would have been the best entry. So if you look at the horizontal rays here, I have them at the 75, 61, 50, and 38.2. Let's see where they are. Okay, so I have them at the 61.8, the 50, and the 38.2, and then I still had this little pivot in, and I suppose this is where I was trading it. This is what I was using to trade it. The last time I traded it, this is in January. I really don't remember trading it. But that $7.60 level was actually a really good level. And if I'd used that today, I would have had a much better entry and exit. I mean, as it is, I'm down 41 cents per share, unfortunately. So I bought here. Now let's go back to the 1 minute so it's a little bit more clear. And let me get rid of the Fibonacci so it's a little bit easier to see. So I bought here on this candle, and I had an order in for $7.97, and then it started going lower. And so I was like, all right, well, I've got to cap my losses. As long as you cap your losses and extend your gains, you win in this game. Unfortunately, and it was below this 760 level, and I was like, okay, that's it, I'm out, but then unfortunately, it just, that was the bottom right there. I got out at the bottom. At least I didn't get in at the top. I remember looking at this and thinking to myself, I don't trust it. I don't think that it's going to go higher. I mean, it's a momentum trade. Let me see what it'll do. The news is a phase 2, 3 trial enrollment type of thing, and that's usually just a flash in the pan. And so I was like, okay, well, you know what? If it goes down to this Fibonacci down here, that'll be a good entry. And this Fibonacci actually somewhat corresponds with some price levels previous price support on other updates. So it's like, okay, you know, 797. And unfortunately, here it goes. It would have let me out, you know, break even over here if I had like held on to it, which, you know, I didn't know at the time as this thing was, you know, price action was going. You know, it was really quite possible this thing just could have kept going down and down and down, you know, and so, yeah, you got to cut your losses at some point. Well, here it goes right here. Went back above 797, dipped down and below again. If I were still holding on to it right here in this spot, or even right in here in this spot, even right in here, if I were still holding on to it, I probably would have just gotten out break even or slightly above or slightly below break even and been happy to have gotten out of the position. I was long 1,000 shares, you know. So anyway, so now here it is, you know, went up and tapped the VWAP here at $8.54, and it's fallen away again. But yeah, tough trade. It shook me off, you know, and just pretty much sitting here waiting, and really nothing. Wait, no. Yeah, no, so Zevo, so this morning EDSA has news on it, and Zevo has no news. I still can't find news on Zevo. What's causing this bump in Zevo? The specific news is it's elusive. I don't know what it is. So I didn't want to trade this, and it would have been much better. Here it opened up, it dipped down, and then it jumped back up, back over its open. And that would have been a good trade, $5.96. So, you know, I could have bought 1,000 shares of that and watched it go to, you know, $2 higher almost, you know. But unfortunately, you know, I was paying too much attention to EDSA, and I didn't, you know, if I don't have a catalyst, I can't trade it. But Zevo certainly did trade much better than EDSA did, that's for sure. So, all right, I got shaken off. I have entered into 200 shares in POHA at an average of $9.29. As this thing moves forward, I want to see, you know, kind of what the broader market does and so on and so on. I'd like to continue to average in. If I keep getting prices, I'll go as low as $7.11 on this thing to average into it. So I'm going to take my sweet time averaging into Porsche here. It might pop on this support right here at $9.16, which it actually didn't touch today. It went to a low of $9.20. It might come all the way back down here to $8.46. You know, however it goes, I'm looking to buy the dip on Porsche here and then hold it for a swing trade at least, if not even possibly a position trade. Then the SPY today, so the SPY is just down low. Let's see, let's open up the 10-minute. You can see here the morning 10-minute low in the morning is 433.92, and so it's broken down below that a couple of times. It's like lingering down here below the VWAP. I think the SPY has lower to go, and I think there will be an opportunity to buy the SPY here in the next couple of days. I mean, you know, the Fed is on Wednesday. There's probably going to be, so the Fed meets Tuesday and Wednesday. Tomorrow there's probably going to be some kind of a news leak about what they're talking about in the FOMC meeting. And then Wednesday, Jay Powell comes out and gives his FOMC briefing, you know, and he takes questions and so on and so on. And you know he's going to say what the market wants to hear. You know he's going to say, you know, we don't see any contagion risk for Evergrande in China. We have liquidity. We're liquid. We're not worried about any kind of liquidity drying up. Everything looks good here so far. Inflation is transitory. We're going to keep an eye on it. We're not going to taper for right now. We have no indication of needing to taper, so on and so on and so on. and the market's just going to head up from there. That's my opinion anyway. There are a lot of people, coming out of the woodwork, and every time the market takes a dip, they're screaming, "Here's the crash! Here's the next big one." Now this is a big gap down here. That is a big gap down. I mean, it is kind of scary. I mean, also with the way gold is behaving. Let me pull gold up, gold and silver for that matter. The silver's in a crash. Silver is down below its levels, and from its recent high here in the beginning of the year. Let me move this stuff out of the way. Oops. So from its very high to its most recent low, it's down 28%. That's bear market territory. That's well into bear market territory. And so it's kind of freaking people out a little bit. The dollar is, let's see, I think the dollar is still strengthening. Let's go to the dollar here real quick. The dollar's losing a little bit of steam today. People are a little bit freaked out. I get it. I don't think there's anything to be freaked out about. I think that there's according to the data, according to the economic data, there's plenty more upside left in the market. This is a healthy pullback. There will be buying opportunities galore in here. Look for some beat up equities. And actually, let me take a look at my large cap movers here. Let's take a look at the percentage gain and loss on Porsche here. It's funny, Porsche actually almost looks like silver a little bit, doesn't it? Let's do a percentage. We've got the magnet on. Yeah, so Porsche is down 25%, almost 26% from its recent high. It's actually kind of in crash mode too. Let's see, there's a gap right here. $8.39. That's okay. That's within my range. Let's see. 737 would kind of sketch me out a bit. And then certainly the low down here at $3, that would be pretty scary. I don't think there's going to be a crash, not yet. There's a good 6 months to 9 months worth of positive GDP growth and inflation growth in front of us. Okay. And here's the VIX. I don't know where I got this 24.76 level from. It's from somewhere. Let me go back to the daily here. It's from somewhere back in here. 24.76 is kind of a level, and you can see here it's kind of bumped up against it, come up below, come up above, so on and so on and so on. So, I don't think this is going to be. So the VIX is higher than recent. It is making a higher high than, let's see, the two most recent spikes, one on the 19th of July and then one on the 19th of August. It seems to happen about once a month. This one does seem quite a bit larger, but it's still nothing out of the ordinary. There's still nothing really all that kind of crazy going on here. So I'm still bullish. All right, everybody. Good luck out there. Keep your wrists tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at tomorrow morning's strategy session. I am out.